We're all spending an awful lot of time thinking about financial sustainability. Regulators are spending an awful lot of money and effort trying to promote financial sustainability. But what is financial sustainability? In this video, I'll define it clearly and I'll talk about the characteristics of a financially sustainable local government. So the best definition I've found, and look, scholars have struggled to get a good, clear definition of financial sustainability. The best definition I've found is in front of you on this screen. The ability to meet the reasonable expectations of current residents in a way that does not put at risk the capacity of future generations to meet their own needs. So we need to tease out these key terms a little bit more, in particular, reasonable expectations. It means that we need to be focusing on providing the needs of people rather than the wants. It was never the purpose of a government to provide for wants. That's what the market does, and that's what the market does most efficiently. And it's contrary to distributive justice to provide wants at the expense of the taxpayer. The focus needs to be on needs. We need to also be thinking about and being considerate of environmental constraints. It is not a reasonable expectation for me to expect a cement footpath, street lighting, curb and guttering in front of my farm in the middle of nowhere. That's not reasonable. We need to think about the environmental constraints. It might be reasonable for people right in the centre of the town to expect that. Certainly wouldn't be reasonable here. We need to make sure that provisions for future are fully funded and appropriate. So things like the remediation of rubbish dumps. Are we putting aside sufficient funds to remediate at the end of its life? Is it going to be fully funded when we need the money? If it's not, that's not reasonable. We need to make sure that our OPEX, our operational expenditure, things that are consumed within 12 months, are being funded in full through taxes, fees and charges and intergovernmental grants. If we're funding them through debt or deficits, we are not being reasonable. We are generating fiscal illusion, and please watch the video I've just made up on fiscal illusion to understand that term properly. And we need to make sure that when we do take out debt for capital expenditure, for long-lived assets such as roads and buildings and bridges, then we do so in accordance with the strict criteria that I've laid out in other videos. In particular, we need to make sure that the debt comes with a sacrifice, a quid pro quo, because if it doesn't, we're just kidding ourselves that we're servicing that debt, because really what we're doing is kicking that can down the road, and the next generation will be responsible for repaying all of that debt, and we will have consumed those items at absolutely no cost, which of course, once again, brings about and encourages that fiscal illusion that I suggested you watch on my other video. The next key term is about this capacity of future generations to provide for their own needs. When we rack up inappropriate debt for things that we're consuming now, what we are essentially doing is tying up future tax money of future generations. We're basically spending their taxes before they've even arrived on the scene and paid their taxes. And of course, that will reduce the choices and options available to them. And that is a real problem, a real moral problem that I've talked about in other videos. There's a video called Is Public Debt Moral? And I suggest you watch that. When we rack up implicit debts, so it's not just about explicit debts with a bank, it's these implicit debts also, such as we don't do asset maintenance when we should, or we delay the rollout of essential infrastructure. We accumulate backlogs. When we do those things, we are also constraining the choices and options for future generations. We are also spending their tax money before they've even paid it, because they're going to have to do the maintenance that we should have done. And when we take out debt for items that future generations may not want, they're not going to be consistent with their preferences, then we also affect their capacity to meet their own needs. And this is one of the big problems. How do we know what a future generation will want? Because the future hasn't happened. And a lot of the technologies and things we use now might be redundant in the future. Perhaps that bridge that you're building is going to be redundant in the future because we have flying cars or some such thing. It's a real problem to ensure that what we're spending future generations' tax money on is actually something that they're going to value. And I often refer to this personal budget metaphor, and I have in other videos, and you can't do better than the personal budget metaphor if you want to make sustainable and moral decisions about local government finance. So think of your own situation. I have absolutely no intention of leaving my children debt in my will. I'm going to leave them net assets. In fact, it's my intention to leave them better off than I started life myself. And we'd be aghast at the idea of someone leaving their children a whopping great big debt. Yet, when it comes to public finance, we seem to be content to leave literally trillions of dollars of debt to our children and our grandchildren. Now, if it's not right to do that with our personal finances, please explain to me why that's right to do it with your public finances. Particularly if that debt's been used for OPEX, which it often has been, particularly at the federal and state levels. So this is the rhetorical trope of Calvin Homer in action, and I think it's a really important way to start thinking about your local government finances. So what are the main characteristics of a sustainable council? And this is not an exhaustive list. Go and get yourself a copy of Saving Local Government, my recent book, if you want a more exhaustive treatment of this. But things I would be looking at to say, yep, this is a sustainable council, are things like this. Are the assets maintained at a satisfactory standard? And have you negotiated that satisfactory standard properly and carefully and in a way that will be valid over time? Please see the video on satisfactory standard for more information on this. Have essential infrastructure backlogs been met, and are they manageable? Because if they're not, you're just racking up implicit debt for the next generation. Has the explicit debt you've taken out through banks or treasury corporations been funded through some sort of a sacrifice? You've either reduced spending elsewhere or you've increased fees or taxes. Because if you haven't sacrificed to pay off your debt, you're not servicing your debt at all. Think about what happens when you buy a house or a car. Straight away, you have to give up something to make the repayments on the loan. And what that means is you either have to spend less money elsewhere in your private budget, or you have to go and get a second job like most of us did when we bought our first house and get more revenue. They're your two choices, but it does involve sacrifice. It's the same with public finances. If you're not sacrificing to service that debt, you're kidding yourself. You are not servicing that debt. Ensuring a sustainable council would ensure that their taxes, their rates, are apportioned according to distributive justice, that the burdens of the taxes are distributed fairly. And as I've said in previous videos, in most cases in Australian local government, they are not. We need to have a good long think and conversation about this. A sustainable council has a long-term financial plan that is plausible. It has plausible assumptions in there. It doesn't have special rate variations written in there or huge increases to rates and taxes written in there that haven't been tested with the community and councillor body. It has plausible assumptions about inflation. Please see my video on the inflation challenge that's facing us. It has plausible assumptions about the wages, once again linked to inflation, and it's believable. And I'm afraid a lot of long-term financial plans aren't plausible. And that means that in all likelihood you're making decisions based on a poor foundation, and it's hard to see how you're going to protect the capacity of the future generations to provide for their needs if you're making your decisions on implausible assumptions. And Have you prepared for future challenges? There's a lot coming at us. People think that the COVID financial crisis is over. It's far from over. We are simply in the opening act. Have you made preparations for that? Have you made preparations for other local challenges, demographic challenges, maybe your population's aging, or challenges that might come about through a local economic shock? Maybe you're very dependent on a particular industry that could move, you know, the coal industry or something like that, that could move as a result of this global warming movement. Have you prepared for those challenges? If you've done most of those main things, you're probably a financially sustainable local government. A good number of the local governments in Australia and around the world are not in any way, shape or form able to be considered as financially sustainable. So I hope you found this video thought-provoking and it's helped you to think about how to make your own local government more sustainable. If you have enjoyed the video, please do me a favour, send it to someone that you think it might help. Give it the thumbs up and subscribe so you know about it when I put up new videos, and help me to help others. Thank you very much for your time. Goodbye.